Okay guys, welcome back to the channel. Today, what we're going to talk about are 3 mistakes that every retail trader makes. So let's go ahead and just get into it. So the thing that I want to go over is that the public is almost always wrong. Okay, the market is run by smart, experienced professionals with, years of experience. They do this full time for a living. This is how they put food on the table for them and their families, right? And there are also very smart retail traders out there in your own profession. You're smart, you're a good doctor, a businessman. You do your own thing. You run a successful small business, whatever have you. You could also be smart as well, but that doesn't necessarily mean that you know how to trade, right? The public thinks that they can start an account, let's just say $10,000, and that they can turn it into $100,000. Go, multiply it by 10 times without any kind of formal training, right? So, you kind of got to look at this and say there's something wrong. So you got to get to know who your competition is. So these are the kinds of people that you're up against, right? You have the battle scarred, grizzled, Chicago board, the CBOE pit trader with decades of experience, right? Who has outlasted and outsmarted his colleagues, right? So, not everyone makes it in, trading, but there's these kinds of, old battle scarred veterans who know what to do. They know the tricks, they know how to evolve, they know how to adapt, and they just have so much experience that, they've seen everything, and then they know how to manage the change as the market changes over time. These guys are very scary. You also have teams of elite Ivy League PhDs, right? Who have PhDs in mathematics and computer science and physics and artificial intelligence, who are writing advanced computer algorithms. Like large million lines of code computer algorithms that are designed to destroy you and to take advantage of you. And then you also have large institutions with insider information, right? Who already know what earnings is going to be. They already know, the non-farm payroll numbers coming out next week. They already know this stuff, right? So this is your competition. And maybe you're a smart guy or girl in your own profession, right? Like I said, maybe you ran a small business. Maybe, you're in a career that traditionally has, takes smart people to do. Like you're a lawyer, doctor, software engineer, you're like smart, right? You could be in the top 10% of your career field, right? So you could, not only are you smart, but you have a good work ethic and you apply yourself to your career. Over the years, you've really made a name for yourself and you've climbed up to the top 10, maybe top 5 or even 1% of your career. Like you are a big shot somewhere. But you have zero trading experience, right? So, you will be destroyed beyond a shadow of a doubt unless you put in the time and the effort to learn how the market works to avoid being screwed over by these professionals, right? That I just showed you on the previous slide. These are professionals. They do this full time, day in and day out, just to put food on the table. So you're working day in and day out. Maybe you run, a small business, right? And you're making good money, but you're spending your days working at a small business and making it run and making money that way. But you have, someone writing computer algorithms 40, 50 hours a week just designed to make money and profit off the market, or the grizzled, pit trader, right? That he does this full time. Like he spends 40 hours a week, 50 hours a week just trading. And you spend 40 to 50 hours a week or more if you run a small business, like 60 hours a week, 70 hours a week, running your business, basically, in other words, not trading. You're going to be destroyed. Let's look at this, okay? So to give you to put this more into perspective, let's look at barber school, okay? So on average across the U.S., barber school requires anywhere from 1,000 to 1,500 hours of training, right? So assuming you work, this is more conservative, you work 8 hours a day and you work 20 days a month. That's if it's 1,000 hours of training, that's 6 months, and if it's 15 hours of training, that's 9 months of training. Okay, 6 to 9 months of training just to cut someone's hair, right? You can't even get a license to cut someone's hair in most states across the U.S. unless you've been training for 6 months, right? And all you're doing is cutting someone's hair. Think about that for a second, right? And you want to jump into the market without any kind of training, right? You think you're ready to just jump in there, put 10, 20 grand into the market and start making money, and you don't think you're going to blow up your account? You're going to get destroyed, okay? So let's look at the first mistake. Number one, buying high, selling low. Okay, classic mistake. Basically, you just inverted what you're supposed to do, which is buy low, sell high. Retail traders, number one mistake, buying high, selling low. The root cause of this to me is you get your trade ideas based off the mainstream news. The problem with this is that the news is already reporting stocks that have explosive gains that are ready for a correction. It's a stock with a move that's getting ready to end. Okay, it's going to correct a bit. It's going to do a small retracement, which is fine and healthy, right? In a bull market, stocks also correct a little bit, maybe 5-10% if they have a good move up, right? So they have good gains, but they're ready to correct a little bit, they're ready to shake out, and some people want to sell and take profit, right? And so some supply will come into the market. And the thing is that, the news will report stocks, and it's very attention grabbing, and it's a honeypot for retail, right? Because retail traders don't have the time to put in the work to learn about stocks, or they don't have the motivation to, right? So they oftentimes just want to take the path of least resistance, and hey, CNBC is talking about this new hot stock, right? It's talking about Zoom, it's talking about Neo, it's talking about some other hot stock, and it's gone up 50% in 3 days. So it's attention grabbing, it's a honeypot, it looks like the stock is going to just keep on going up higher and higher, but guess what? It's not always the case. It's very likely that the stock will correct at some point, right? Right? What goes up must come down. So it'll correct maybe 10% or so, and what happens is retail will buy in right near the top, and right as and they're going to sell as soon as the stock completes its correction, right? So right when it forms the low of the last month, it's going to form a low. That's when retail will sell. They're going to get scared and they're going to sell out, okay? And then at that point, in the next week, the stock is going to run back up 20, 30, 40% again and continue its move upwards, okay? This is mistake number one. Mistake number two, they've learned their lesson from mistake number one. A correction is normal, okay? If you buy near the high, it's okay. You just grit your teeth, hold through the correction, keep holding and keep holding. It doesn't matter how long it's going to take. You're going to get your money back. Just hold it until it goes back up, okay? But the problem, bear markets are a fact of life, okay? You're going to come, the market will crash, and I'm not saying I want the market to crash, but it's a fact of life. They happen. If you look back in history, a market crash occurs, ever so often. You're going to lose everything but the shirt on your back. Your family's going to leave you. Your friends are going to pity you. And pick your deity, whoever you want. They're not going to be able to help you out either when you blow your account up. You will be completely destroyed if you let this problem take hold without solving it, okay? This is, it's a huge problem, this mistake number two, because even if you don't get, let's say you don't get destroyed completely, the other problem is that you are in a position now where you're holding forever, right? A stock could stay near the lows and hug the bottom for years and years without going back up. So you could be holding on to a snail or a slug for 5 years, 6 years that goes up 5%. Or you could pick a huge winner that goes up 500% in 5 years, right? So it's a real problem, right? This is like death by 1,000 cuts. Your position doesn't go anywhere. Your stock doesn't go anywhere. You're not making any return on your money, But because you bought high, you want to hold it until the price of the stock goes back up to your entry point. If you buy at 100 and it goes down to 50. You don't want to let it go at 50. You want to let it go when it goes back to 100. But chances are it just stays at 50, goes down to 45, goes up to 55, goes down to 45, and it does that for years, right? And you don't want to sell because you're like, it'll go back up sooner or later, and you're going to be in that position for years and years. Okay, mistake number 3, playing for the last dollar. Because if you're a retail trader, once you finally get a winner, you lack the emotional discipline and self-control to take your profits. You think the stock is going to go to the moon, right, to Mars, and to the edge of the ever-expanding universe. You're thinking this thing is going to go, you're going to be thinking this thing just never going to stop. It's going to keep on going and going and going. But again, right, a market correction will inevitably occur and you will lose all of your paper gains. You will then fall into mistake 1 or mistake 2. So once the stock runs up, it's going higher and higher, the correction will occur, your paper gains will vanish, and you're either going to sell it at the bottom of the correction, or you're going to grit your teeth and hold it through the correction for the next 10 years, and it's not going to go anywhere. Okay? So, with these mistakes being said, how do we prevent this? Because I can't just dump these mistakes on you and then, not give you any advice or at least an idea of how to prevent this. And basically, what you need to have is a system of buy and sell rules. All right? You need to know, your system needs to tell you when you want to buy and when you want to sell. Not only that, is you need to have the emotional self-control to follow your system even when it seems hard. So, even when it seems like the stock might go back up, but it's taken a dive down 5-10%, you need to have the emotional self-control to say, hey, if you have a sell rule that says sell at 10% loss, you sell it at 10% loss. And if the stock goes back up the next day after you sell, that's too bad. That's what your system says. Follow the system, right? Don't override the system. If you override the system too much, there's no point in having the system. Right, so you got to respect the system and your rules, and you got to create this by yourself. Of course, you can take inspiration from other people and their systems, but you really want to work something out according to your trading style. So, you want to prevent this by following your own system. And then you also need the ability to revise and adapt your system over time, because the market changes over time. So you also have to, look at your system and say, it's performing well, or look at it and say it's not doing well. What do I need to change? I can improve something, or I'm taking some heavy losses recently. What can I do? And look at it like a system that you follow to make your money. Okay. So the last thing is you got to know when to break the rules, right? Because history has also shown us that while the market usually goes up, you have black swan events, or you have, flash crash, you have the Black Monday, COVID, of course, as well. You need to know when to break the rules. You need to know when your rules may not apply, when your system does not apply, because your system is only going to be good for the average case, right? So your system will work 90% of the time. And then there's going to be those few outliers, those few remaining 10% where your system won't apply. You got to have the experience to know if you're in the 90% or the 10%. So this is going to be a great segue. At some point in the future, I'll post a video about how, what a system looks like. I'll detail my own system that I use for buying and sell rules, and we'll get to that next time. So, we'll see you guys later.